From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for June 12th, 2026. Your division-leading Milwaukee Brewers are home for the next 6 days. This weekend it's the Phillies, followed by a 3-game set with Cleveland. And if that's not enough, the fests are stacking up. There's Polish Fest this weekend at the Summerfest grounds, and right next door there's the Lakefront Festival of Art. Wauwatosa has Greek Fest and Tosa's Heart Fest, and not to be outdone, Discovery World is having Turtle Fest all weekend. Turtle Fest? Let's dip our toes into the world of weird news. Britain's wackiest taxidermist invented a high-five machine made out of rats' legs. So how does that work? Rats' legs are so short. Anyway, did I mention that he's a taxidermist? So Max, did he invent anything else? I'm glad I asked. His catalog includes a rabbit toaster, a rat pencil case, and magnetic stuffed mice. They make great gifts. And who doesn't need more refrigerator magnets? Ooh. Well, we haven't heard from Florida in a while. Recently, Florida Highway Patrol arrested a man after a wild car chase. When they pulled him over, they found him to be wearing a Dalmatian print onesie. Did I tell you he's 6 feet tall and weighs 200 pounds? Besides the crime against fashion, he was charged with fleeing from law enforcement, reckless driving, assault on an officer, resisting arrest, possession of methamphetamine, and petty larceny. But I can't believe he wasn't charged as an adult for wearing a onesie. Maybe they're illegal in Florida. On the podcast today, we have Art Rothschild, Mike Hoelzl, and looking at back at the week, here's Kyle Tetting.
Well, thanks, Max. A decent week overall. Nasdaq up 0.7%, 179 points this week to close at 25,889. The S&P up 0.6%. That's 48 points on the week, closing at the bell at 74.31. And the Dow Jones Industrial Average also up 0.7%, closing at 51,202 for the year. Nasdaq up 11.7, the S&P up 9.1, and the Dow up 7.2. Are pretty happy overall with where we finished the week. It seems like things have settled down a little bit from where we'd been, and yet maybe the biggest piece of news this week was probably the least calm of all that we could be talking about. We finally got the much-anticipated SpaceX IPO on Friday. And maybe not quite as much movement as I might have expected, but we did see nearly 50 million shares trade hands across the day on 55 million or so that were issued in the IPO. And so a very, very active trading day overall. What kind of takeaways do you have from SpaceX? What kind of takeaways do you have from, I think, the market's focus on something that has probably taken us away from, at least temporarily, a lot of what longer term is clearly a much more important story?
Kyle, what a great introduction. What a great week. Shocking, quite frankly. And you're right, with all the focus on Elon and his new, well, not new venture, but this IPO, which is the biggest in history, which was a very successful launch, pardon the term. It took us away from what has been the problem now for weeks on end, and quite frankly all month, which is the war in Iran. And so the president either is going to, pardon the English, bomb the hell out of them, or we're almost going to have a deal. And the oil prices go up every time there's a threat. They go down every time there's relief from the threat. My assumption is we're going to get a deal, okay, which, again, brings us back to the news. All eyes were on this IPO, which is very techy, but ironically, we're still getting questions from our clients about bubbles. Is there a tech bubble? There's not talk of is there a space bubble, because he's the only game in town right now. But once we get Anthropic and whatever it is, AI, what's the other one that's coming out?
Oh, yeah.
ChatGPT, I guess. Is it ChatGPT?
Well, so OpenAI and Anthropic are the two kind of main players.
Yeah. So with those coming out, it's like, can the market withstand all this money going into these things? Apparently it can. As we were talking about earlier, capital's expanding. And again, these numbers that you went over, the Nasdaq up 12%. And by the way, April has not been good, to this point. But you look at the year, the S&P up 9%, the Dow up 7% in a good week, which wasn't good consistently. We lost money on the threats. We made money on the potential resolution. So overall, I feel very good about capitalism and what it's doing for individuals who are in the game, and individuals who are in the game in a well-balanced way, which we recommend so you don't have to worry about as much of the clients.
I thought the most interesting part about the SpaceX launch today, I hate saying launch when it comes to rockets. That's just so tacky. But it was you look at some of the reaction that happened today, and it was pretty muted. It was almost like the sad trombone sound amongst a lot of analysts, but which I find fascinating because it ended the day at 160 a share, which is up almost 20%. But they just expected so much more out of it. I saw some analysts say it could get to 200 a share, or 300 a share. And for them to now go, yeah, it wasn't what we were expecting. It's not that good of a day. And I was like, if you recall a lot of other IPOs, they took off like a rocket. I'll be here all week. Thank you very much. I'm headlining the Catskills this week with Shecky Green. Some of you know out there what I'm talking about. And then it just craters back down or comes back down to earth. I got a ton of them. But this one was just real steady today. It popped up and it's kind of stayed between 160 and 170 all day. There wasn't that giant leap and then crash. So I found that very interesting, and I found the part of the reaction of everyone basically, again, just saying, that's not where we were expecting. Pretty interesting, the fact that if you invested in it, you made 20% today.
Yeah, I think it's important to note that there are a lot of kind of timelines we're following on SpaceX right now. The first was obviously, okay, when do those shares start trading? And we had any number of questions from clients and interested parties looking at how do I get in? What's the best way to get in? Okay, well, that's over. And if you want the shares, now you know what they cost. You can go to the market and buy them today, tomorrow, whenever, and you're going to pay whatever somebody else is willing to sell them to you for. But the problem we have now is that a month from now, 6 months from now, a year from now, some of these shares that have been locked up now start to make their way into the market more broadly, and that adds to the potential volatility. It adds an entire class of potential sellers who may be willing to sell those shares for less than what they're trading at right now. And so as much as I would love to say all the excitement of the first day is what we were paying attention to, I think this is a much longer story, not only about how does the share price go, but also I think, okay, what's the ultimate purpose of this money? Is it going to be productive more broadly to the economy, but especially is it going to be productive to this business? Because there is a lot that can happen from here that's going to change the dynamics of what we think about SpaceX far, far into the future.
Yeah, and it comes down to really the difference between speculation and long-term investing. And I know you have some statistics that you shared with us with respect to how IPOs do at certain points in time. And yeah, it's exciting to buy something new, be the first kid on the block to have it. But we really, as you just alluded to, aren't going to know what this is really worth until years down the road. And so anything between now and then is pure speculation. And we're all going to have a piece of this somewhere. And it's not even going to be included. This is an interesting tidbit that you're aware of. It's not included in the S&P 500 for now. So if you want to have access to it, you need an actively managed fund, unless you're going to go out and buy your own ETF or a fund that's deliberately heavy in it. And for my money, I don't want to take the risk. I don't mind having a piece of it if it goes up, but I don't want to lose a whole bunch if I'm speculating.
I think the juice for a lot of people is it's space, right? It's the future. I had probably a few clients this week say, I want in, and we talk about it, like why it may work or not work for them. And a couple of them just came back to me this week, were like, Mike, it's the future. It's space. And it was almost like I was talking to their inner child of when they were growing up and they were like space, the great beyond and everything. Well, now I can somehow own a piece of space. That's how some of them feel. And so I thought, I wasn't trying to talk them out of it. It was just kind of talk through the pros and cons, but a lot of them just kept coming back to, no, you don't get it. It's space. And I was like, no, I do get it, but that's how some people felt about it.
When are we going to be able to buy the pods that are going to enable us to launch to the new, Space station's up there.
I think
That's what I want.
Honda's working on those right now.
I'm sure. Don't get me started.
It is humorous to look at the headlines. It's humorous to look at, I think, all of the offshoots of this business and all the things that can come. And meanwhile, what I think is the bigger story right now is still Iran, is still our kind of how do we extricate ourselves from this problem? How do we go from, okay, is this a quagmire to, okay, no, now we have resolution to something that is continuing to weigh in so many possible directions. And we had a consumer price index report this week that showed that inflation is running very, very hot. And all of a sudden you look at, well, okay, energy prices are still the thing that's causing trouble. We're looking at a Federal Reserve that's going to meet next week. What do they do with inflation? Are they going to be forced to raise rates? And Art, I think when it comes down to it, yeah, we can kind of have this shiny thing in SpaceX that we stare at, but really what's driving more than anything else right now the economy and markets is what are we going to do about the price of oil, and especially how do we resolve this Iran conflict?
Yeah, I think you hit on so many different things there that are so important to consider. And Mike, I do agree with you. There is a bit of excitement with respect to space, but it is a distraction vis-a-vis the real problem. So how do we solve this contrived war with Iran? Well, we need another contrived end to that war. And I'm confident that the president's going to come up with that because he's running out of running room, to the elections in the fall. And I do feel that, I'm starting to believe as, I think the incoming, Fed chair believes that some of these increases in prices are temporary. And even in some of the statistics that came out with respect to the increase in the CPI this week suggested that it's things that are oil-related that are having the biggest impact. And I expect oil prices to decline, as the president is suggesting they're going to, as soon as we get a deal. I'm not as concerned about that. The new Fed chairman, when he comes in, is faced with pressure from the president, who wants him to lower rates, when economic policy long-term and globally, with Europe raising rates this week to counter inflation, that's the traditional remedy. So he really is going to have to talk about when we raise rates, or he's not going to talk about it at all, or he's going to talk about how temporary inflation is as he sees it. He can't lower rates in this meeting. So it's going to be a very interesting discussion after that meeting. So I'm very excited about that meeting. But I'm more concerned about El Nino. Okay, I'm reading about a significant weather pattern forming in the Pacific, I believe, that could cause some dramatic damage going forward, akin to, as we discussed a couple weeks ago, what the war is doing. We got to rebuild. Somebody's got to rebuild Iran. We've got to rebuild our oil stores. So unfortunately, despite the damage caused by the war, despite the destruction, despite the deaths, over time, we're just going to spend more money to mop up the mess that's been created in the store because all this stuff fell on the floor.
No, I think that's fair. And when you look at the impact that not just the war, but these weather impacts, the broader implications of what's happening, it is infrastructure spend. It is spending to find new ways to extract oil and gas. It is all of these things. And I think it is part of why this conversation from the Federal Reserve has been so important. And to your point, we've got Fed Chair Kevin Warsh, the newest of the Fed chair, to speak hopefully next week, Wednesday. Although one of the things that's interesting about that is that Warsh has been clear that he's not necessarily committed to doing a speech after every Fed meeting, and that is a drastic departure from what we have gotten used to from the Fed over really the last 15 or 20 years. It was an increasing level of transparency, at least in conversation. And now you have a Fed chair who is more or less saying, we don't need to telegraph as much as we used to telegraph in the past. And so I think as we look at, okay, what do these impacts have on the Fed's ability to navigate inflation, you may not have the same communication from the Fed than what you've seen.
I think he's kind of boxed in a little bit in terms of speaking after the meetings, because, it's pretty much out there, the fact that he was put in place to lower rates as fast as possible. The president basically said so, right? So if inflation continues to be this hot, he can't be like, we're going to lower, because that literally goes against all the data of a data-driven society that they are. And he can't also say, well, we're thinking of raising rates, because then the pressure is going to come from the White House, and they can put a lot of pressure on, even though it's an independent body, they can put a lot of pressure on him. And so this is not the best situation for him to be in, because I do think, again, he's kind of boxed in. If he says we're thinking of lowering rates, he's going, like, his own body is probably going to say, other Fed governors are going to say, no, we're not going to do that. And if he says we're going to raise rates, well, look out, because the storm from Pennsylvania Avenue is going to come pretty fast on him.
If we could bet on Kelce, and I don't plan on doing so.
Don't ever do that.
Yeah, one bet would be, is he or is he not going to speak? Whether it's a speech or a press conference, sure. I'd bet, and I'm not going to, because I'm not going to do that, but good. I would bet that he's going to say something, and I'd bet that he's going to say something similar to what you just alluded to, that over the long term, they would like to see lower rates to stimulate the economy. But at the present time, with the war still raging or hopefully almost over, they have to wait and see. Okay, so Powell did that a lot. So I think you're going to hear wait and see. You're going to have the traditional remedy for fighting inflation is to raise rates. We'd rather not do that. Let's see if he says this. Okay, if not, I'm going to send him a note. Hey, dude, you want me to write the speech for you? But I think he's a smart guy. And let's hear, not speaking wouldn't be smart. Promising lower rates wouldn't be smart. But indicating as an objective over time, lower rates to help consumers at a time in which it's appropriate. I think it'd be fascinating. So it's going to be interesting to hear.
And what's been interesting to watch in some of the economic data, we got the University of Michigan consumer sentiment number this week, a little bit of an improvement from what was a record low at the end of May, kind of the preliminary reading for June looking a little better than what we had seen. But what was especially interesting is that the biggest increase in sentiment, right? What category of people went from feeling the worst ever to feeling slightly better than the worst ever? It was people in very low income brackets who pointed out that they had been most impacted by high oil prices over the span of the May survey to the start of the June survey now. And again, it's just a preliminary reading. We'll have a second at the end of the month. But gas prices had come down substantially, about $1 a gallon. And so as you look at what impact is really out there from the effects of inflation, it's impacting the lower income folks more than anyone else. They've made it clear in how they say they're feeling about the economy, how they feel about the world more broadly. And oh, by the way, those are voters too. And so if we can't get the Federal Reserve to take some of the steps necessary, if the government more broadly isn't taking those steps, you may have that consumer sentiment number that continues to flounder. And so I think as we kind of look at the bigger picture implications, Horsch is not in an easy spot here, right? And Art, maybe he does need you to write that speech because I don't envy the choices they have. We have a labor market that's strong enough. So, yeah, okay, you don't really have signals for lower rates immediately, but at the same time, you have inflation that should be telling you to raise rates, but you don't want the pain that comes from doing that 6 months or a year from now. You don't want to be the cause of the labor market disruption. And so I don't envy the place they're in right now.
Can I put a quick plug for our Orion system, the portal? Anyone who hasn't had a chance to play in there, please start or call your advisor. The ability to look back and see how you've done literally year to date, month to date, quarter to date is really fun. And so all you have to do is go to performance, push buttons, and you're going to see that you're making money, or I hope you are if you're a client. And if you're not a client, give us a call and we'll set you up and you can get into your portal and see how well you're doing over time. So I'm cautiously optimistic that we're in the midst. We're obviously having a good year so far, but I don't see any reason why we shouldn't be optimistic, of course, about this current year and capitalism in general and things like launching into space. I mean, this is a pretty interesting week.
Well, I think that's such an important point, right? That it's really easy to focus on the negatives, and there are always plenty of them. And then we come back to the old trope that the market climbs a wall of worry. We come back to, the ultimate goal of capitalism and the ultimate goal of free markets is to solve all these problems. And by solving them, we create opportunities for investors. And so I think if, as an investor, you're looking at the world and going, well, everything is terrible right now, Well, that's an opportunity to fix it. That's an opportunity to profit from what it takes to fix it. And if you're looking at the world and going, well, everything is perfect right now, well, okay, but is it priced for perfection? And I think right now we're looking at the world and saying, yeah, okay, prices are a little bit more exceptional than what we're used to seeing, but at the same time, there are a lot of problems out there, and there are a lot of ways I think that things can get better. And so I'm with you, Art. I'm really encouraged long-term about what the opportunity set looks like. I think investments in things like SpaceX, Mike, to your earlier point, it's the future. Well, yeah, and that they may not be the answer, but somebody else will be. And so if it's not Elon, if it's not SpaceX, well, somebody else is going to come along and fill that niche or some other niche. And all of a sudden, we're solving problems we never even knew existed. We're finding new ways to create medical technologies or Velcro or whatever comes out of this next time around. So I'm exceptionally interested in kind of what comes next, and it's why we're investors. With that, we enjoy doing the program for you. We'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.